I want to get your take on China, maybe your assessment of the economy here right now. Do you get a sense, just given that first quarter GDP number of 5.3%, that we've seen the worst from this economy, and really we're seeing a pretty meaningful turnaround now?
Well, I think as your previous guest has said, there is a lack of domestic demand. That's going to be a challenge going forward. The number probably came in roughly a little bit above expectations. You can see that global activity helps in support here. The policy stance helps, but over time the challenge is going to be this domestic demand problem, and of course the fact that China is really in deflation. So these are big challenges, and then when you look further down the line, you look at population growth and so forth. You really see growth declining on a structural basis, and that's going to be a challenge going forward. So I'd say this is roughly as expected, with this big caveat around domestic demand.
Which, Philip, David here, is, to what you alluded to, a very important part of the puzzle. China's doing well because other economies are doing well, I guess, is one other way to phrase that. Philip, what do you think is the next big move that policymakers should put in place here to address the domestic demand issue?
I think it's a tough one. There's only so much easing you can do. They have to deal with the hangover on the real estate side, as we all know. I think it's about confidence, and it's about the global environment, frankly. I mean, this is a challenge that we're all going to face, that a lot of the global developments currently make business more expensive, makes it hard to cut rates aggressively. Inflation is sticky in most of the world, different than in China, but the external environment basically is one where you're going to face challenges that you can only address up to a point with policy measures. I think this is a theme that will be pervasive throughout the global economy.